I can't believe that Nvidia stock has rallied over 220% this year to date in 2022. And it sounds like it's supposed to still have some ways to go, but a lot of people think that it's a massive bubble. Nvidia is the leading stock in the S&P 500 over the last year by far. It rose more than 2 times as much as the next best stock, Royal Caribbean Group. Nvidia is up 225% compared to 115 for RCL. It's up over 549% over the last 5 years and was one of the first stocks to bounce back from the bear market in 2022. It recently killed its earnings for Q2 of 2023 and just announced a huge partnership with Google for AI. Its earnings are expected to more than triple this fiscal year due to booming chip sales for data centers and artificial intelligence. Chief Executive Jensen Huang has said that a new computing era has begun and that companies worldwide are transitioning from general purpose to accelerated computing and generative AI. The company that started out as a pioneer for graphics processing units for video games has now expanded into AI chips used in supercomputers, data centers, and drug development. The Nvidia chips are also used for Bitcoin mining and electric self-driving vehicles. And Nvidia is positioned right in the middle of it to profit off of everything. How is Nvidia rallying so much? Are the gains sustainable? Is Nvidia a good company to own for the long term? Is it too late to hop in? We're going to try to answer these questions by diving into the following items. 1. Business. 2. Fundamental and technical analysis. 3. Buy and sell activity. And 4. Risks. 1. Business. What is the Nvidia business? Nvidia has 2 main business segments, graphics and compute and networking. The graphics segment represents everything that has to do with gaming, streaming, cloud-based visual and virtual computing, and the compute and networking has to do with the data center platforms, the AI, the high-performance computing, the autonomous vehicle solutions, and other. If you look at some of their top products on the gaming side, it's things like the Nvidia GeForce RTX 490. It costs $1,600. For enterprise, for example, Nvidia's H100 graphics cards are selling for more than $40,000 on eBay. They're high-end chips that are essential for deploying AI software. Microsoft, for example, spent hundreds of millions of dollars on tens of thousands of Nvidia's A100 chips to help build ChatGPT. Nvidia controls the vast majority of the market for AI chips. The graphics segment represents the majority of Nvidia's revenue. It's 58%. The other 42% is the compute and networking segment. Both channels are fairly evenly distributed and growing extremely fast year over year. The graphics segment grew 47% year over year, and the compute and networking segment 55% year over year. Who is Nvidia selling to? Nvidia powers 70% of the supercomputers on the global top 500 list. Its largest US customers are Amazon, Microsoft, Google, Meta, and Dell. Where do they get the products? Nvidia relies on Asian chip foundries like Taiwan Semiconductor Manufacturing Corporation and Korea's Samsung Electronics. It will continue to place orders with Taiwan for the next generation of chips. Taiwan produces about 90% of the high-end chips globally. Fundamental and technical analysis. In its latest quarter in July, the total revenue was $13.5 billion, up 101% year over year, well past the guidance of $11 billion that was eye-popping to investors when it was released in May. In other words, they've doubled their revenue and they blew away the expectations that were already extremely aggressive when they came out. Since then, more than 24 analysts have hiked their price targets for Nvidia stock. And it looks like Nvidia is going to continue selling every single GPU unit it can secure from TSMC in the quarters ahead. For the full year, analysts now expect Nvidia earnings to rebound 216% and sales to jump 93%. Financial ratios. To understand how the company's health is doing, we're going to compare it relative to other competitors in the semiconductor space. Those most relevant competitors are TSM, ASML, AMD, and Intel. Compared to those 4 competitors, Nvidia had the highest growth forecast for the next 1 to 5 years. It also had the highest gross profit margin over the last 12 months. Its net profit margin was average compared to the other competitors. It had one of the lower cash flow margins of those 4 competitors, but that's because they're aggressively reinvesting and they don't have huge debt. They had the highest price per earnings by far versus the competitors. But that makes sense because the stock price has soared a lot more than the next best competitor, but their earnings are only catching up now. Over the last 10 years, their stock price has soared 4.2 times more than the next best competitor. Although a high PE can suggest that a stock is expensive, we'll later see that analyst ratings don't think so. In fact, out of the 51 analysts that are covering Nvidia stock, 47 of them rate it a buy. Overall, the company is very profitable and in a good position to keep growing. Their cash flow per share is 24% higher than their EPS, which is a sign of good management and a sound balance sheet. So in terms of technical analysis, let's look at the stock over 3 years and maximum time. So this is 3 years. and we can put it on the maximum. It's reaching all-time highs and has formed a big cup with a kind of ascending base. It's looking really strong. The uptrend is a very vertical V-shaped base, which is not always the best sign. I typically prefer a more rounded support line, which gives time for investors to accumulate more and also gets rid of weaker investors. Here, over the last 3 years, there's a massive gap in volume between 380 and 280, which is risky because if it falls past this point, it could drop a lot more. That being said, looking at the 6 months, we have a pretty strong growth pattern. It's just dipping slightly below the moving averages right now, so there might be some downtrend in the coming months, but it did that here and then it bounced right back up to new highs. So clearly there's still a lot of strength in the support. But to be honest, a little bit of downside might do it some good, because if you look here over 3 years, here the RSI line is extremely overbought. But again, this stock is growing fast and hitting new highs, which is definitely a bullish sign. For example, Meta, which also has a kind of V-shaped recovery, it rallied 140% this year to date in 2023, but it's not hitting all-time highs yet, which to me looks a lot more risky. Nvidia has what looks like rising volume, maybe a little bit thinning here, but it's hitting new highs. So overall, I mean, the stock has gone through a massive breakout. It's rallying super fast, but it looks like there might be some downside ahead. That's not an issue unless it hits this mark here at 380, and then it will fall all the way to 300. Buy and sell activity. Let's look at what the insiders are doing, what people think about it, and what institutions are doing with it. According to the latest FinViz ratings, almost all analysts are upgrading the stock rating over the last 6 months. On average, all of these ratings over the last 6 months have raised the stock price 23%. Looking at some more in-depth analyst reviews, we can see that Morningstar has a fair value estimate of 480 compared to 300. The stock price is at 455 right now. They say that they're extremely optimistic about the rise of AI workloads and how Nvidia should cement itself as an AI chip leader. They're seeing that the results, guidance, and supply expansion at key partners like TSMC, which is largely now revolving around AI graphics processors, will generate a lot of growth. They say will generate $41 billion revenue in fiscal 2024, compared to $15 billion a year ago and just $3 billion 4 years ago. So Morningstar says that they're growing fast, and it's due to this rapid expansion into AI graphics processing. In other words, they're capitalizing off of the AI growth. CFRA has a price target of 600 over the next 12 months. They say that their view reflects the superior growth prospects of GPUs and the emergence of generative AI that's creating unprecedented demand for Nvidia's GPUs. So CFRA thinks that the building blocks for large language models are driving permanent changes to the infrastructure of how cloud customers operate, and Nvidia is positioned to benefit off of that. Argus also raised their price target over the next 12 months to $600. They said that Nvidia blew out the consensus estimates, which reflects Nvidia's ongoing momentum in the AI space. So analysts are super excited about the growth of AI and how Nvidia is projecting to capitalize off of this. In terms of insiders hold 4% of the stock, which is healthy, and it's not significant enough ownership that would give them massive control into the stock or proxy voting. Over the last 6 months, the insider trading has slightly more selling than buying, but that's relatively normal. There haven't been any massive sell-offs or anything that would be concerning to shareholders as of the last year or so. What institutional investors own it? There's the usual giant asset managers that own the company like Vanguard, BlackRock, and State Street. Fewer institutions bought more shares of the stock in Q2 2023 compared to Q1 2023. Hedge funds were a driver of that institutional ownership, as they bought more Nvidia in Q2 compared to the previous quarter. So in other words, fewer institutions are buying more shares. Is that a sign that they know something that we don't? Maybe the ones that do own it are doubling down, or maybe some people are just accumulating it, but they don't know what's ahead. In terms of risks, what are the risks that could affect the Nvidia business in the long and short term? Nvidia is a leading chip vendor today, but other powerful chip makers and tech titans are focused on in-house chip development. Companies like Google are constantly trying to bring some production in-house so they can cut their costs. In other words, if the only competitive advantage of Nvidia is that it's the first comer, that won't be sustainable, because eventually technology will catch up and other companies will start stealing their market share. They're also extremely dependent on third-party suppliers like TSMC, which reduces the control over the product quantity and quality, manufacturing yields, development, enhancement, and product delivery schedules that could harm the business. The fact that the manufacturing is in Taiwan means that they're also in the middle of a kind of political tensions arena. The Nvidia gaming GPU unit also has seen boom and bust cycles based on PC or demand and, for example, cryptocurrency mining. That's never a good thing for stability. Overall, companies that have super fast growing prices usually scare a lot of investors because they think that if it's coming up fast, it's going to fall down fast too. It has a really high PE, which suggests suggests that it might be overpriced and reinforces this notion that it's in some kind of a bubble. Some investors see demand as a problem and think that it's just at some point going to hit a wall, although that doesn't seem to be the case right now. A lot more conservative, traditional sit and hold investors like Warren Buffett would also say to avoid some high-tech thing that you don't understand because it will have a lot of rising competition soon and the gains are unsustainable. That being said, right now Nvidia has a relatively strong and healthy business, and it's piling on and matching the incredible growth expectations. It has been outperforming Wall Street estimates and is repeatedly seeing accelerated growth. It's clearly the leader in the semiconductor space and as a result has been the top performing stock by price gains in indexes like the Nasdaq and the S&P 500. What do you think about Nvidia? Let me know in the comments. Thanks for watching. Please like and subscribe. Let me know what kind of videos you want me to make moving forwards.